It's Monday, January 6th. Quick one-up video for you wonderful ladies and gentlemen. We had the election certified today, and today was really the first day people were back fully from vacation. I know that the technical first of the year was last week, but it was a holiday shortened week, and I think a lot of people still were away. So today we got to see a little bit of that allocation money, particularly at the open and a little bit at the close. A lot of traders took those up opens today to lock in some gains. Remember, a lot of people were carrying forward some big gains from last year and were reluctant to sell because of tax purposes, and I think an up open like this today was a tempting opportunity to sell into. Is this the end of the rally, or is there more legs? Let's discuss levels. VIX didn't show that much in terms of bounce. It actually wound up going a little bit lower. The primary trend line and the reference lows between 1478 and 1490 could be some support. I only really start paying attention to the VIX as far as higher volatility above 1936. If it can clear there, yeah, we could have 2308 to 2376 back in play. With regard to the futures, we had a rich close from Friday. If that were to be repaired in the ES, that's 59.65 quarter. In the Qs, it's 21,399. I had a little bit of a different number that I posted earlier. I had said it was 21,398 quarter, but I looked back and this to me looks more accurate. Few things to note. We had many look above and fails of interim range highs. First of all, the 60, 50, 75 in the ES, and in the Qs it's 21,812. So bulls do need to get back up over those levels to sustain still higher prices. With regard to pullback levels, they're sort of okay, I guess, even as much to that 59.65 quarter, because that would line up roughly with the 200 MA 30-minute, so not all that much blood spilt, but I would feel better if they can hold above 6,005 quarter. Below there, we're looking at 59.9675, 59.8275, the 59.65, and then after that we could be looking at like 59.18 quarter. Generally, I like to be long things when they're above both 200 MA and 100 MA 30 minutes and or stopped out or short below those levels. They can be right or right out by the dips. The same thing with the Qs, needs to get over that 21,812 on the pullback basis, assuming we don't hold today's low of day, which we still may, of 21,661, we would likely see 21,559 quarter, 21,498.75, and then likely the repair of Friday's VWAP to that 21,399. But generally, keep it simple. Need to get over that 60, 50, 75 and 21,812. As far as SPY goes, we got very close to that 600 level. High of day was 599.70. No surprise that we had a little bit of a pullback. This setup here is actually a lot simpler visually. Bulls do need to clear and hold the 20 MA. Anything below there to me remains vulnerable. That's 597.22 and falling. And I think if we were to lose the 50 MA again here at 593.36, there could be still further liquidation break. I would think at least to fill the gap from Friday to 591.95 and maybe even a check back to that 584.03 to 586.12 neckline. We could be forming a double tap head and shoulders here. It's possibility and maybe even likelihood. To negate that, just let the bulls get themselves up over the 600-ish area. I think that could kind of start negating it, and I'd feel better still over the 602.49. And then I'd feel really solid about a blow-off type of move if we could take out the head at 609.07. But as of now, still in range, potential double tap head and shoulders setting up here. I would feel better if we can regain at least the 600 level. Qs sort of similar, but they are over primary trend here. Very clear. I think we need to clear high of day here at 527.92. Back below low of day to me gets a little more iffy at 522.03. And if we can't hold the 20 MA at 523.24 and then again the 10 MA at 520.38, I think we would check back to the 50 MA at 511.94. Would the second test hold? Maybe, maybe not. If that fails, I think we come down to 501.35. 100 MA at 495.71, and then maybe even fill the 11.5 gap to 492.21. So if you want to put on some protection, I like buying 512, selling 500, maybe an overwrite down around 485-ish. And if you want to sell some upside calls, anything above 540 highs makes some sense to me. NVIDIA today got the move we had been looking for. Pretty much back to the old highs, not quite fully there, but close enough. The bulls there need to get up and stay up over 150.84. That was the intraday neckline before the late day pullback. We did check back to it and it failed. So what shouldn't happen does happen, meaning we clear that level. It should still go higher to the 152.89 reference highs and maybe even make new all-time highs. If we were to get to the green channel high, which would be quite a ways, I don't think we would do that at least until earnings. I mean, you're looking into the 172s if it were due tomorrow. I generally think as long as we're above 147.32, that's the 78.6, it's okay. Below there does get a little bit more iffy, but for upward momentum, 150.84. Apple finally kind of broke the down streak today, but not all that impressive. We bounced to the green channel high and stalled, so are we respecting the channel now? The answer to that is simple. If we can't clear high of day at 247.33, then maybe. If we continue to pull back, I would think we get the 239.91 and maybe a retest of the 237.23-ish area, which had been the prior resistance, which now likely will be some support. On the upside, the 20 MA is 249.98, so basically 250, and then the 10 MA at 251.74. Those areas to me look like potential resistance points. Google's still acting really well, but very close to the green channel high, so I do like trimming up here around those 198s through 200s. I'd get a little more iffy if we weren't able to hold low of day at 193.85. That would be way too much give back for me. On the upside, the 2.618 is still up at 204.67, so that area and the 201.42 reference highs likely could be tested. Tesla, it's kind of iffy here. In a bit of a downtrend, I would have liked a little bit more of a pullback to retest that 350.32 to 358.64 breakout area. But we are over the 2 times range at 403.20, so anything above that to me is sideways to higher, anything below it is sideways to lower. The downtrend would take us up to the 235.02-ish area. Meta has been pretty boss lately as well, up 25 plus points. I saw that Dana White is actually going to be added to the board there, and I know Zook is trying to get back in El Presidente's good graces. We're above the 20 MA, we are over the 600. It seems to me like it could make a move to the yellow channel high, considering market conditions stay bullish. 648.23, and if we were to make it to the green channel high, we probably won't tomorrow. It would be 667.39. Good upside strikes for calls against shares. I'd be leery if we couldn't hold today's VWAP at 621.74. I'd get still increasingly more bearish below the 20 MA at 609.19, and then of course the 602.95. But I think the 621.74 VWAP is a good pass, don't pass line for us here, at least in the interim. Netflix has also been super bullish. I know that they had some wrestling going on tonight. I got a notification. 50 MA is 860.41. That area is key. We did stall at the 2.618 at the 926.90, so technically we should see the 860.812, which is the 2 times range, and then we'll see. We now have a downward sloping 10 and 20 MA at 902.56 and 910.01 respectively. Those could be upside resistance targets. To me, this just looks like some sideways consolidation and probably could resume to the upside if the market conditions stay favorable. Mobileye, this is a trade we've been in and has been paying off very nicely. Today we did get the 2.618 target at 21.92. We actually top ticked it at 22.37 at the green channel high, which was a little bit lower from there. I put out the call that I thought it was a good opportunity to trim into. I think you can now use the 200 MA as a stop, anything below 21.04, so let's just say 21, but I do like trimming here. On the upside, the next big upside targets are 23.46, 24.85, and then the descending anchor VWAP, which is 27.16. The Bitcoin, which is of course our ultimate risk-on, risk-off arbiter, we stalled at the underside of the yellow channel. Probably a good area to trim some gains into. In the overnight, there's a low of 102.345. I generally think it's okay as long as pullbacks to 100,000 hold. That's really the psychological pass don't pass line, so anything above, bullish, below, not so much. Yields have remained stubbornly strong, and we actually made a new low in TLT today. I'm curious to see if we have a look below and fail of the 86.98. I think we could put an alert up over the 86.67 over high of day. Probably could be a right or right out long with a stop either below the close at 86.90 or low of day at 86.67. I don't rule gap fill to the 11.1 fill at 85.10, but I do think the downside is probably a little bit more limited than traders think. Upside probably is a little bit capped too. I would think the 20 MA at 89.40 to 90-ish area is probably some resistance. Longer dated unto pullbacks, I like buying some call spreads, maybe playing for the move up to the 90s, 95s. Generally speaking, up opens could get sold into with some lock-in. It'll be curious to see what happens with a down open. I think part of the problem for this morning was we had a big move up on Friday and then with a rich close, and then overnight inventory being pretty much 100% long, and then in the RTH session pushing it up a little bit higher, and we just got up above some key resistance areas, and we saw a little bit of a liquidation break once we broke below them. So far, key levels are holding on the pullback, but I do think that up opens maybe continue to get sold into. At the very least, I like locking in some gains, trailing up stops, and putting on some hedges here with the VIX super low. Why not buy some puts or put spreads a little bit longer dated, playing maybe for March? I'll be curious to see if January remains strong. Often we'll have a strong January, a pullback in February with a rebound in March, or sometimes you get January, February, March all up. We have two back-to-back strong years. This year may even be just a flat year or slightly up or even slightly down. I don't necessarily have a thesis on that just yet. I'd be surprised, though, if we don't see at least some more volatility this year than we have seen in the last couple of years, although we did have that pretty big volatility spike last year on the yen carry trade unwind. Generally, though, I like to just go by levels, never assume end ranges, and take profits along the way. I'm also running a promo this month if you have friends who want to check out this service. The Super Follower subscriber service, if you subscribe and you're a new subscriber, I'm offering a free month to my premium video service if you haven't tried it before. If you are already an existing subscriber and you haven't tried it before, just hit me a note. I'll send you the promo code. Like and follow for more.